The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I'm your host, Brian Akers from Akers Financial Group. I'm president and founder of Akers Financial Group and host of this radio podcast, Winning in Retirement. Today I have with me Paul Franco. He's got his MBA, fully licensed financial advisor from Akers Financial Group. Welcome to our show, Mr. Paul Franco.
Yes, sir. Thank you, Brian.
I'm glad to have you today. I hope you're ready to roll. We got a great topic to really talk about. So are you ready, Paul?
I'm ready. It's a beautiful day. Let's go.
All right. So this show is this. For each person listening today, you need to understand that this show isn't about someone 18 years old or someone 88 years old. It's for someone of any age in between 18 and 88. It's about you right now. There are some core financial topics that you need to embrace and apply to your financial life. This will affect your financial fingerprint and allow you to reach your goals that you have. And so Paul and I create the show, Preparing to Win in Retirement. How do we prepare to win in retirement? When does it start? How does it work? What's the mindset to do? That's what we're going to try to cover today. So keep up with us. Make sure you're focused and listening and ready to go.
Yep, take some notes.
All right, preparing to win in retirement. Let's just start a real simple thing. Why would we want to win in retirement, Paul? Why would someone want to win?
Well, the idea would be that I believe winning in retirement's retiring, having the choice to retire, whether it be early or at that point whenever you want to, and to be able to stay retired throughout the rest of your life.
Absolutely, that's right. Winning is when you are retired, you know you're winning because things are taken care of on the financial side, and it's not the daily worry. Now, that is a big deal because for most of America, worrying about those retirement years, and when they're actually in retirement, worrying about it is a big deal.
Right. Where is the income going to come from? You stop working, the whole game plan changes.
All right, so besides the show today, we're going to be inviting you to our own Winning in Retirement Training Day. We're going to teach you how to prepare to win in retirement. If you go to our website right now, akersfinancialgroup.com, you check the Training Day tab, and underneath there, you're going to find out that we have a whole section of classes called Preparing to Win for Retirement. Now, Win in Retirement, we're going to have Paul Franco running those classes that day. We're going to have it on October the 13th. So if you're feeling lucky, on Friday the 13th, October 13th, we're having it at Water's Edge over in Belcamp, Maryland. Check us out on our website at akersfinancialgroup.com under the Training Day. So Winning in Retirement Training Day is all about how do you win, how you get ready to win. And today's show, Preparing to Win in Retirement, we're going to hit the basics, and then that day we'll go a lot deeper.
That's right.
With 4 sets of classes that afternoon from 1 to 5. A lot of food, a little bit of music at 5, and a market updates and portfolio managers. There were 20 different classes. Check out the website for a class that would help you where you are right now. All right, so this class we're going to have is going to be a lot more detail. This show is going to be just trying to help people understand how much and how important it is to begin. Now, so let's do some basic talk of basically financial planning.
Sure.
Now, in financial planning, what kind of animals do I like to speak about normally on these kind of shows?
The pig or the cow? Which one is it?
Yeah, I think it's the cow. Now, Paul, I'm going to test you a little bit on my cow talk. Now, have you ever met the cow?
I believe for most people, it's getting that first job. That's when you first meet your cow.
Oh, right. You're exactly
And
right.
actually, I would argue it's a calf. It's much smaller than a cow.
Yeah, depending on your first job, it could be a very small animal.
That's right.
But the idea is this. If we're building a cow, a cash cow, something that's going to give us money over a lifetime, we have to start. Mm-hmm. That very beginning is your first job. And we're going to call it your first baby calf.
Your first baby calf.
Cash calf, right?
Cash calf.
We are not brilliant farmers. We're financial advisors using the amazing cow and the milking cow as an example today.
Right. I don't even know. Well, I guess what do you feed it? You feed a cow grass and hay, and there's probably some other things as well. But
I'm sorry, that's funny. I want to mess with you about that, but we don't have a lot of time. We don't want people
go ahead.
Tuning us off, though. We want to keep with it. But yes, cattle eat grass on their own. You don't usually have to throw that out. And there's hay and straw, and then there's different mix that you put together into their feed that you put.
It sounds like you're an expert farmer there, Brian.
That was my vacations growing up, was on a farm, and yes, milking cows was the thing. morning. I'd wake up 4:00 a.m. on my vacation when I was a kid, go out and help my cousin milk cows.
Wow.
So I do know a little bit, but not enough to do it for real. But thankfully, they had machines for it. My other cousin we had to do it by hand. That was a whole different world.
I bet.
But the
I'm
idea
sure it's
is
all different now.
idea is this: when you have a small calf, you cannot get any milk from a calf. The calf has to grow over time.
That's right.
That first job is going to grow over time. You're going to get money, and that money in cash, the cash cow, bringing the money into your bucket, is going to grow over years. Now, what do you know about a bucket, Mr. Paul Franco?
Yeah, I actually use the bucket analogy as well in addition to the cow, especially because if you're saving for a retirement portfolio, trying to create retirement income, your bucket's going to also fill with water. It's going to keep filling over time as you add to it.
Right.
Eventually,
I have a milk bucket. I'm trying.
Oh, do you?
Yeah.
Okay. Well, you can use milk. You can use water. You can use anything you want.
If water gets in your milk bucket, the milk's no longer any good.
That's right.
So you got to keep it pure.
Yeah, that's right. But the idea would be that as you grow that bucket, as it continues to fill with water, or if it's with milk, especially as you get closer to retirement, you're eventually going to jab a hole into the bottom of that bucket, and it's going to start dripping. You're going to start collecting income. The water is going to start dripping from the bucket. You're going to jab a
hole in the bucket, not install a faucet?
Here's the idea, though, is the bigger the hole that you stick in the bottom of that bucket, the sooner that bucket's going to empty. The smaller, the more that it's going to be able to last, the longer it's going to be able to last.
I think I'm following your bucket example there.
Yeah.
Now, I just want to play with the cow example.
Sure.
So when you get your first job, that's going to be your baby cash calf. And you need to understand that as that come in, you got to take care of it. And so when we have a bucket, we have to understand that buckets leak. Buckets can make the milk disappear. It can go all kinds of different places if we're not careful.
That's right.
As money comes in. The buckets leak for you, Paul, at all?
The idea would be that they don't, especially when you're contributing to those, when you're adding to the buckets, you don't want them to leak.
Yeah, but the general first bucket you guys have is your budget. You know, the money flows into there, the cash money. What's another way of doing the milk from the cow being cash? Any other names you can think of?
I don't know. What do you think?
I think moolah.
Yeah, moolah. I've heard that.
Or you
before,
go with mooney or any other type thing. Cashola? No.
Cashola.
But the idea is that the first job is that very first cash cow to get money from. As that money comes in, you need to have a plan. You need to have a plan for your budget because we know that all budgets are going to leak. All buckets are going to leak. And we need to plan for that bucket to have a portion to grow. In reality, we need to have some go to our spending bucket, but first we got to do a concept called paying yourself first and start a second bucket to basically start to build a second cash calf right away. And that's good, solid financial planning, is to save first in your life and put money aside. And that is a way to prevent the bucket from overfilling and spilling or leaking and money not being there when you need it most.
Right. You need to have multiple buckets for, I believe there needs to be the long term, the short term, and that midterm, trying to have buckets in all those different phases of life.
Absolutely right. So ultimately, the long-term goal is this. You want to win in retirement. The idea of winning in retirement is you look on your field of financial money, your financial success, there will be a herd of cows that you can milk from. That means you have investments that you can take interest from, investments you can take dividends from. You might have real estate that pays you rent. There's all kinds of ways to have this cash cow herd, but you can't start by having a whole herd. You're going to have to start with the very first cash cow and take what you're doing now. You need to be very serious with where that money goes. So, Paul, have you ever talked with any new clients that are younger that have to address what they're doing with their money right away? What kind of examples would you think of?
Absolutely. There's situations, and it happens all the time, where somebody they get their first job, the income they're earning from that job is more than they would have thought they were. Mm-hmm. And so you know what they do, Brian? They spend all of it.
Enjoy it, right? And
they even
spend more than that.
They spend more.
Average American spends more than 100% of their pay.
Absolutely. So and they're racking up credit card bills. You buy the new car, the new truck.
Yeah.
So the idea is that if you're spending all of what you're earning and what you're saving, then you're not adding to those buckets to your future self. You're not paying yourself first.
Yeah. So what happens is this. Do you really want to win in your retirement years? You need to prepare to win. That preparing to win is to know your own financial fingerprint, to know where your money is going. How would you describe a financial fingerprint, Paul?
I believe everybody has their own specific financial fingerprint. And so for everybody, the situation is going to be different. And that's why I do believe it's so important to meet with a financial planner to work with you where you're at and help you find, what are those goals that you want to have? Do you have a short-term goal, maybe buying a house or buying another property? But ultimately, you're going to have one goal to retire one day. Most people do.
Right. One of the first things in that initial meeting is to find out if their bucket's already leaking. What I do it plus or minus. The money coming in equal to the money going out. And do you have the ability to save it all? And some people don't when you first meet them, right?
That's right. And you have to, it's a brutal conversation. You have to either cut spending or you need to earn more if you want to keep the same lifestyle.
Yeah, it's pretty simple in that if you bring home is less than your spend out, your money going out the door. So if you're putting milk into the bucket and the bucket's empty every month, and then all of a sudden there's a side bucket where you're like owing people, all of a sudden you got to say that's a problem. I have negative cash flow, negative milk flow.
Yep, that's right. I don't know what what that other bucket would be, the bucket that you owe.
Oh, that's the creditor. The creditor comes after the farmer,
I wonder if there's another analogy than bucket, though.
I guess they take the cow.
They take the whole cow, right?
Yeah, they start I'm sorry, I can't really go too far on that. But the idea would be is that you go into debt. A lot of time that is a huge problem for someone very young when they get that first job is to overspend and try to catch up with everyone else on that first job. You got to build your career to make money last a lifetime. You need to earn it to make it last. You got to save it.
That's right.
You got to build all these things. So today's show is called Preparing to Win in Retirement. The idea is this. All of us, no matter what age, 18 or 81, 88, whatever age, it doesn't matter. Any age between, you must prepare to win. And that's what this show is all about. At Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We do have offices in Forest Hill and Lutherville and clients all around the Mid-Atlantic region, all around the country. It's so easy to begin winning in retirement. Just give us a call and schedule your meeting with one of our team of advisors. Call 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. When does the game start? We will explain in a minute.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I am Brian Akers, and today I have with me financial planning advisor Paul Franco. Welcome again to the second quarter. Our show is called Preparing to Win in Retirement. We want you to be very prepared for your retirement. But the idea is this. You need to do the work to prepare to win in retirement. One way of doing that work is you can go to our website at AkersFinancialGroup.com. Check out our tab called Winning in Retirement Training Day. Check out our it's like a whole day, or actually afternoon and a little bit in the evening, of how we train to get you ready to win in your retirement years. And we have a whole set of classes under Preparing to Win in Retirement. So no matter what age, this fits for those who want to learn more, to know how to work, to get to meet the host of the radio show, to get to know us, get to know our company, and understand where we're coming from with our advice. All right, Paul Franco, we're going to have a really good quarter here. Let me start with this question. Hey, Paul, when does a game start?
I believe the game starts wherever you're at now, right? It's like you just mentioned before, it's not whether you're 18 years old. Sure, it's better if you start earlier, but a lot of times you might be starting in your 30s or 40s. The game starts right now. That's the important thing to know.
Why is that so important?
Because the decisions you make even in your 30s and 40s drastically impact, the ability to prepare to win in retirement.
A lot of people put it off, don't they?
They do.
Why do they put it off?
A lot of times they just like anything, you just delay the idea that, for most people, I believe that they're scared to think about it. It's a big idea, being able to retire. You want to balance that future goal with, the now and taking care of yourself now.
Absolutely. Yeah, it's one of the hardest things is to even think about retirement. The people that think younger in life about it and get started paying themselves first, setting money aside, and building a cash cow herd by basically setting money with purpose, they will have money when they need it most. Those that put it off will not have money when they need it most. Now, basic advice is building a foundational approach to all this.
That's right.
Now, the basic foundation, this would sort of be the names of the first 3 cows that we're working on. The first 3 cow names, the first one is protecting your family, which is having the proper amount of insurance. And then you have different cows. Some are called life insurance cow, disability insurance cow. Some's called your health insurance cow. So that when an event occurs, you go to that cow and say, hey, you pay the bill. I'm not paying it.
That's right.
We don't have to go to the duck. That's more disability insurance. But you go to the cow and draw the cash.
Yeah.
So the very first thing, protecting the family, is where we have to spend money to offset the worst case scenarios. How do you go across? What do you do with clients when you're talking about basic insurances and checking them out?
Yeah, this whole groundwork is so important in those first meetings. Is protecting your family, making sure that you have the proper life insurance to cover you if you were to untimely pass away.
Right.
Unfortunately, we don't have that crystal ball to know exactly when that is. So we need to plan as if it's going to be tomorrow, but live as if it's going to be later.
Absolutely, yeah. I like that one. Yeah, you plan for the worst case tomorrow as if you might die tomorrow, and then you invest like you're going to live forever.
That's right.
Even though we won't really, but we want to make that money last as long as we do.
That's exactly right.
So protecting your family could be through your group benefits at work. It also is your how much coverage do you have on your auto and home insurance? Do you have the minimum coverage? I think you should have 250,000, 500,000
I agree.
to protect your whole family and to protect you from uninsured motorists especially. So there's very important advice when it comes to how you buy even your auto insurance. And then it comes down to, do you have health insurance, or are you risking it because you just say, I'm healthy now, I'm not going to need it, why should I buy it?
Right.
That's frustrating to hear when people say that.
That's right. Yeah, it's not exactly a wise decision to make, because it sounds great when you're healthy and everything's well, but when you actually need it most, that's where it's important to have it.
Yeah, what happens with people is that they don't do the health care, or if they don't cover their car properly, the worst case scenario occurs. A car has a bad accident, it's totaled, and then it's not insured for the whole value. And so before they know it, they're upside down. They actually have to pay money when a car is totaled because they owed more than the insurance company would pay.
That's right.
Their gap insurance covers that. There's just a lot of issues when it comes to proper insurance. So by protecting your family for the worst case scenario means in your budget, you do have an insurance part of your budget. And it's one of those things you need to have it, especially if you're a small business owner. We need to properly insure our business to make sure it's worth money, to be careful and make sure you don't lose it all because of just not buying the simplest of things.
That's right. Yep.
The idea is also we got to build an emergency fund next. And now that's another name of a cow. The cow is going to be a bucket. That's going to be your emergency fund. How do you explain emergency fund, Paul?
Yeah, the idea would be, depending on how you tap into that emergency fund when you need it, it needs to be between 3 to 6 months of your living expenses. Mm-hmm. If you're tapping into the emergency fund regularly, it's got to be on the upper end of that and be a 6 months that you have in an emergency fund. Your emergency fund is what allows you to not go into any debts when those bad situations occur. Or if something happens in your house, you need a new roof, $10,000 situation, you have an emergency fund that you can tap into so that you don't have to take on any high interest consumer debt.
Many people that have a lot of credit card debt have zero money in the bank. And so there's this habit that they have to start with. And so what I recommend is this. Have your paycheck, some of your paycheck go straight to a savings. If it's just $25 a pay, 30, whatever number, the habit of starting to send it to the savings account will then start to signal the fact that you are going to fix your process. You're going to fix your bucket, how that cash comes out and how it flows down and how it gets into your buckets and build these cash cows for your future. It comes with a plan. Make sure you have a plan and set up something that's going to hold this money.
Right. And a lot of times people might have too much in their emergency fund. So it's trying to fine tune exactly how much you should have there versus how much should be in maybe a different bucket to help you reach another goal.
Yeah, so as you're preparing to win in retirement, and you want to get started right now because the game's starting, If you want to win this game, the retirement game, the game has already started. And so you need to take a look at where your money's going. Do you have proper insurance? That's step number one. Step number two is build an emergency fund. Get it started. Yes, you need to get it started as we're doing all these first three foundational things we're talking about. You need to save money. Make it a habit. Make it go there, because whatever you leave in your regular checking account, you're going to spend it all. You know that.
That's right.
No matter how much money you make, it's going to go quickly.
Yeah. It becomes much more, difficult not to.
And the third name of our cow, we're just going to call it paying off personal debt. That cow's doing all the work. It's like a farming cow. It's out there. It's more of a bull, I guess.
Right.
It's towing the heavy equipment. Trying to get rid of personal debt can be one of the best investments that you can make. By getting rid of that debt, you help your own personal cash flow, and then you have the ability to save more and reach other goals.
Right. Somebody who comes in and they might not have a lot saved right now, but if I can look at their situation and they have no debt, they're in a much better place than somebody who has some money saved but has large debts that are high interest bearing debts. So it's really important that in that second meeting, we work through a plan to pay off some of that personal debt. Now, if you have a low mortgage rate, you might have a car payment at a low interest rate. Maybe we just pay the minimums on those if we're able to. But those credit cards, those personal loans, those higher interest in that 10 to 20, upwards of 30% on some of the credit cards, we need to create a plan to pay those off.
There's also, when you're doing this planning, trying not to accumulate the credit card debts that are going to be beyond what you spent each month.
Right.
So the reality is credit cards are easy to get. Once we get one, we use it, and it's fun. You can get whatever you want, exactly when you want it, pay for it later. And then the problem is if you didn't have the money then, well, you have it later. Now, some disciplined people that end up being great financial savers will actually pay the credit card off every month.
Right.
It's just they get the points, they get the awards, but then they pay it off, so they're not paying any interest. Many great savers, when they meet us for the first time, they'll say, I've never paid interest in my life. And I'm like, congratulations, that's incredible. That's not a normal thing. It's very, very rare for someone to never pay. Understand that in reality, we probably will need to make sure we pay less. So not going to be a never pay person, but imagine that you don't want to be paying all your money out to interest. So if you ran your budget and you said, oh, here's a chunk for taxes, here's a chunk for the insurance I need, and I got debt. And then the reality is every month there's a budget for the interest, and you'd be amazed how big that number is by having too many credit cards, too much balance.
That's right.
You don't really think about it. You just think about the minimum payments. But in reality, if you're not paying that interest, you get to keep that interest.
That's right. Yeah. The compound interest aspect of retirement planning, it can really work for you, but in credit card debts, it really hurts you.
It does.
It compounds against
your money's spoken for, and then if you try to fix things, it's like, oh my, it's going to take me 18 months, 36 months to get over it. And the idea is, you got to do it. So when does the game start to fix your finances, to get you ready to retire someday? Immediately. And I had this one case where the client came in and they were, I think, 58 years old. And they said, well, we want to retire in 4 years. I'm like, you can't live off the money you make now. How are you going to retire? And they go, well, we don't know. I said, well, you want me to tell you? You're going to have to do a lot of work. And so we had a couple meetings. We talked about all this money going out the door for debts. And the amazing thing is, I think that couple came back 6 months later. They had a game plan. They knocked half of it out. Within a year, they had knocked it all the personal credit card debt. It was cash flowing. They're building their emergency fund up to the levels we wanted. And then we're just cleaning up and getting ready. And then now this year, they're turned 62 and they're going to retire.
That's awesome. Yeah,
but they had to go 100% all in out at those years because they were wanting to prepare to win. And so we had to put them on a game plan and we had to get them going. And their timeline was tight. They had to cut everything else out.
That's right. Yeah, you're spot on, Brian. It's even if you make a plan to pay off the debts and now you have done so, we gotta work against that habit to have that same situation happen again. So somebody who can make that change and want to go all in, that's so important.
Absolutely. So the idea is this. When you sit down with us, we start by taking a look at your financial fingerprint. We talk about you and where you are, talk about your net worth, your assets, your liabilities, your cash flow. We talk about, do you have an emergency fund, your insurances. We try to look at all these pieces, these foundational pieces that we've been talking about. And that is actually called your financial fingerprint. At Akers Financial Group, everything we do is about you. Now, perhaps you've been sold something, regardless of whether you needed it or not. Not at Akers Financial Group. With us, your retirement money follows this financial fingerprint. It's a retirement plan based on you, on your unique financial fingerprint that determines where your money goes. It's not about us. It's about you preparing to win in retirement. So give us a call at 833-WIN-RETIRE and schedule an in-person or Zoom meeting with one of our team of advisors. That's 833-WIN-RETIRE, 833-946-7384, or visit our website at akersfinancialgroup.com. Scroll to the bottom of the homepage and schedule a meeting right there. So go ahead and give us a call, 833-WIN-RETIRE, or go to our website, akersfinancialgroup.com. Hey, you don't have the pension your father had, and is Social Security.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. I'm president and founder of Akers Financial Group, and you're listening to our show, Winning in Retirement, our radio podcast. Thank you for listening and tuning in to our show. Now, today I have with me Paul Franco, financial advisor from Akers Financial Group. Paul's an expert at working with people, listening, understanding what's going on, and then helping you apply on what is wise when it comes to finance to your exact situation. So as we talk today, what I want you to get across is this. We're talking about preparing to win in retirement, how to get yourself ready, what to do. Are you motivated to do it? Are you going to motivate yourself? What is it going to take? Now, we have a special day, October the 13th. So if you're feeling lucky, on Friday the 13th, October 13th, 2023, we have a Winning in Retirement Training Day over at Water's Edge in Belcamp, Maryland. Go to our website at akersfinancialgroup.com, check out the Training Day tab, and check out our classes, all the different classes. One of the things you'll see is there's a segment of classes called Preparing to Win in Retirement. This will be headed by Paul Franco, a set of 4 classes that day that are going to be there to really help you understand what's going on when you're getting yourself ready. So today's show's about it, but this training day, we have classes to go a lot deeper into the detail of how to do it. All right, Paul, the question for here in the third quarter is this. You don't have the pension your father had, and is Social Security even secure? So how does this affect retirement planning nowadays?
Yeah, it's this idea where the people, our grandfathers, your fathers, the reality is that their retirement planning was having a pension, having Social Security that they could live on, but then have the investment income supplement that income need. That's not the norm anymore. The idea is that there's a handful of private pension plans still available, and then there's still government pensions. But the reality is that most people are going to have to self-fund their retirement. The idea where Social Security not being secure is are they going to have to cut benefits, Brian? Do you think they are?
Well, that's what they say in their reporting. In every one of our Social Security statements, it says that by, I think it's 2034, they're going to cut down by 22% our benefits if things don't change under Social Security system.
Right. So and I believe that's true. They probably will cut benefits. They're going to cut your benefits, but then they're also likely going to raise that retirement age.
I don't believe they're going to cut benefits in any time soon. So if you're already drawing, I don't believe they're going to cut that.
I agree with that. The idea, though, of people being grandfathered into the existing way it is, but I like the idea when we do retirement planning to let's plan as if Social Security is not going to be there. Will there be some benefit? Yes.
So you don't want to count it at all.
That's right. I don't want to. I'd rather try to find ways we can self-fund it as much as we can instead of being reliant on some sort of Social Security.
Yeah, I guess the harder part would be depending on the age of the person.
Right.
Now, the closer they are retirement, so if they're a baby boomer and ready to go right now, Social Security would be a piece of that.
Absolutely.
And would be in our planning. Someone 20, 30 years that have a lot of time to save, we don't want to count Social Security or project Social Security at some escalating piece that looks enormous in your planning.
Right. And if we are going to project it out, we're not going to show it adjusted for any inflation.
Yeah, so there's been some major increases on Social Security recently because of inflation, but I believe they're going to work on changing that. Now, Social Security is something where that is where you retire at 67 is the full retirement age for anybody born after 1960. And the earliest you can draw is 62 based on normal retirement qualifications. There are some ways of getting it earlier through disability and a widow benefit. But generally, I believe that starting age will move. I think the full retirement age could move. I also believe that means testing will actually come in on the Social Security side someday. And that's just like they do on Medicare, that's where right. If you make more than $204,000 on Medicare, you pay higher Medicare premiums. And so it's tested based on what kind of income you have. And that's why it's so important to balance out your savings and try to actually throw tax-free money into your retirement years so you can keep that lower taxable so that you can actually qualify for more of these benefits in the future.
Right. It's that fancy term, IRMA.
Yeah.
You don't like IRMA.
Yeah, income-related
monthly adjustment amount. I think that's it.
Yeah, that's good enough. IRMA is a nice name, but it's also a thing you need to understand if you're over 63 years old, how your income in the current year can affect your Medicare by 2025. Very important topic. So as we're preparing to win in retirement, the things we do now make a big deal down the road. We've been talking cash cow and how we build cash cows and talking about cows and moolah and buckets and all that kind of stuff. But the idea, if you're just thinking about this, how would you have a cow to milk in the future if you don't, first of all, have a cow and then grow the cow? The cow isn't going to grow itself. And that's the main point here is this. You're working a job. They're not going to grow a pension for you and say, here's 40% of your income, 80% of your income like they used to. Even the old federal government pensions of 70, 80% are now 30%. Mm-hmm. Their plan is for you to have at the federal government level, you get your 1% a year for work, you get your TSP, like a 401k saving with a match, and then Social Security, and then the combination will get you up to that level. But you got to do all three things to make it work. You need to save from day one at your job to throw money to your own future. So this idea of pensions being gone, all of a sudden, all of the requirement of putting money away is on your side of the ledger. You must look at your bucket, your money coming in, your job, that first cash cow, set aside money that goes to your retirement years first, and then you spend the rest. That money goes into a cash cow, and you're feeding that cow and growing it. And then someday you'll be able to pull money from that cash cow to actually live on.
Yeah, especially the earlier you start, but even in the earlier you start, the better. But if you're in your 30s, your 40s, even your 50s, the reality is that you probably have been saving some to some sort of workplace retirement plan. And so if you look historically, a stock market returns the past 10 years, they're pretty inflated, right? It was average S&P was like closer to 10 to 12% from 2010 to 2020. But the reality is now we need to make sure that we fine tune a portfolio, make sure that we have the asset allocation appropriate going into this next 10, 20, 30 years out, especially, that's what we're planning for when we're planning for retirement planning.
All right. So with the stock markets up and down and the way they are, the market the last 2 years have been actually flat to negative. And The idea is that the markets should give you 8 to 10% in a moderate type portfolio design. If you take higher risk than that, you can try to get 10 or more. The hard part when people design their portfolios or that investment cow, they take too much risk for it. And then instead of making 10, 12, 15%, they lose 30, 40% because they really went for it all and lost. And that's the balancing of your risk level and how you treat your cow. Is your cow going to be healthy? You need to build it out over time. And you'll hear in all of our different shows, all these topics about investments. Honestly, that's how you treat the cow. That's what we're talking about. Now, in this quarter, we're talking about the idea of, yes, your parents relied on pensions. We can't. We have to set money aside because no one else is going to put it aside for us. There's the reality that Social Security is even warning us on their statement that they're going to provide less than they even say on their piece of paper. So you really, really, truly have to do this yourself. And guess what? We think you should have a coach, someone to come alongside and help you. Paul, that's been your role with people, is to help them understand what options are available and then what to do, right?
Right. Yeah. Ultimately seeing where your money's at now, but also what choices do you have that you haven't been taking advantage of? A lot of times it's workplace 401k or government 457, anything like that. But should we also set aside another cow, per se, and start setting aside money to grow that cow as well? Maybe it's a Roth IRA. I do, if you're able to, depending on your income. I love the idea of maxing out a Roth IRA. $6,500 for 2023 if you're under 50, or $7,500 if you're over 50. But ultimately, it's going to depend on your situation. Are we able to do that? Should we be maxing out the 401k? What should we be doing?
I have clients come in and they sit down, and then some of them are not successful in their finance at the beginning. Some are walking in, it's very successful. On the successful people, I ask them, what got you started saving money at your work and putting money aside? And normally they all say there's someone, their manager, someone that told them they need to save for their own future. They need to take it serious and put money aside because no one else is going to do. And guess what? That's what this show is talking about today. We need you to save your money. Set this money aside. Throw it to your own financial future, because no one else is going to do it. The more motivated you are to do this and save first, the better chance you have at building an actual herd of cash cows to milk whenever you want. Yeah. You need to have your goals in mind. Guess what good financial planning does? Now, Paul, it's pretty easy to figure out goals like college and paying off your mortgage and retirement. It's all mathematical, right? I
would agree. Yeah. I mean, especially if you might have kids, you want to help with their college planning. Working towards paying off a mortgage, it is all financial, you can run retirement projections, and throughout life, those circumstances do change. So it's important to regularly fine tune those projections and make sure that they're up to date with what your current situation is.
So during the show today, we talked about the first cash cow being your job. And then we talked about building a foundation and starting to have other cash cows, such as protecting your family with proper insurance, building an emergency fund that's going to be liquid money that you can access when things go wrong, then paying off personal debt so that that's not showing up anymore. That'll free up cash flow to allow you to set the next levels of goals. These are the dream goals, the goals that are for your financial future. It could be your kid's college future. That's a calculation to figure out. That's all it is. And then there's the idea of the mortgage. You want to buy a house. You want to change houses. You want to pay off your house. Whatever that goal is, figure it out. Then the third one is retirement. How do we get enough money set aside to do that? That's what planning does. Preparing to win in retirement begins with planning. And by going through this kind of plan, you understand when you get to the retirement years that the best part of retirement is where you're going to get your actual time back. That's where you decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job, making that moolah to make that money grow and build that cash cow up so you can use it in retirement years. All this kind of stress to your time goes away when you've reached your goals. That you're now consumed by things that you want to do. It's so easy to begin winning in your own retirement. Go to our website at akersfinancialgroup.com and scroll to the schedule a meeting section and let us know you'd like to schedule your free consultation with one of our team of advisors. That's akersfinancialgroup.com. Give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. And we'll give you a call on Monday to schedule your free in-person meeting. Go to akersfinancialgroup.com or call us at 833-946-7384 to start planning for your retirement now. Your retirement depends on one thing and one thing alone. We will explain that in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to the fourth quarter of Winning in Retirement. I'm Brian Akers, and here today I have with me Paul Franco. I'm a financial advisor at Akers Financial Group. He's here to talk about preparing to win in your retirement years. And also, we're here today to talk and invite you to our special Winning in Retirement Training Day. We've created an afternoon and a little bit in the evening on Friday the 13th of October. Yes, if you're scared of that day, don't be. If you're feeling lucky, come on out to Water's Edge at Belcamp, Maryland, to have your training day with us on winning in retirement. We have experts from our office and some experts from around the country providing different classes that day free of charge. Go to our website, akersfinancialgroup.com. You see the training day tab. Right under there, it'll tell you about the speakers. It'll give you the whole schedule, and you can sign up right there online. Please do that, and then we look forward to meeting you that day at our Winning in Retirement Training Day. It's a very special day that you can go. We also create a website called Winning in Retirement Training Day, if that's easier to remember. All right, so call akersfinancialgroup.com. Everybody memorizes that, and that's what they spend all their day at that website.
Everybody spends all their time on that's their favorite website, right, Brian?
It should be. It's a great website. They can play around and check us out if they'd like to. All right, so the fourth quarter here, the question is this tough one. I'm going to just bring up the question, and then we're going to talk about the answer to it. The tease about this, like really trying to tell people this is what you got to think about. Your retirement depends on one thing and one thing alone. Now, this one thing, what do you think it should be, or do you want me to tell you?
Well, I believe that it depends on what you're saving, what your savings rate is, as part of your take-home pay.
Okay, so you're saying that if someone wants to retire and retire at a certain age, it's like a math problem based on the amount of money that you're saving compared to what you bring home.
That's correct. And especially the idea where there's not just a certain number to get to for every individual. Like it's not $1 million or $2 million for every individual to have saved for retirement. It's going to be different for everybody. If you're spending less in retirement, your needs going to be much lower than somebody who's spending $100,000, $150,000 in retirement. So
yeah, absolutely.
Yeah. So that's the idea, is that it's if you're spending everything, spending all of your savings, you're never going to be able to retire. Now, if you're not spending any of it, you actually would be able to retire a lot sooner.
Yeah, I think what Paul just said is this: if you in your budget and you bring money home, so we're counting that money that comes into your checking account. That's your net pay, hits your bank account. That money, if you're spending all of that comes in, the math says you're probably never going to retire unless you're saving a lot ahead before it comes into your bank account.
Right, or if somebody's saving for you.
Yeah, which would be nice, but not as much anymore. The other idea is this, is if the money comes in your checking, you don't spend a dime because of the way your life is organized, you're called retired now possibly because you can live very easily. So the idea is 100% of your money, you never can retire if you're spending all of it. If you don't need any of it, of course you can retire. So the math is, when can I retire if I have a certain savings rate? Now, if someone's making, and they bring home $3,000, $5,000 a month, that's nice. If they save 10% and you bring home $5,000 a month, the idea is saving about $500 a month, 10% of that take-home pay, which would be just like what you want to do with Roth 401k, Roth IRAs. The reality is this: if that money gets saved at a 5% rate, now that's one of these charts that we found online, the 5% rate, the money's going to take a long time to grow. If you save 10% of your pay, it's going to take about 51 years of working at that rate and 5% earnings to get you where you need to be. That's a big career. If you're 20, that means 70 before you could retire at a 10% savings rate and a 51 years of growth at 5%. Right.
Yeah. The idea, especially, and as you save more, as that percent goes up, those working years get a lot lighter. If you're doing 15%, it's 43 years. 20, it's 37 years. So as you save more, your working years becomes less.
Yeah. So there's like a seesaw with retirement planning. What we're saying today is the most important thing depends on this, and that is, what is your savings rate? Are you saving? Is that rate 10, 15, 25%? Is it a realistic savings rate? Are you really committed to preparing by saving and putting money away? Because if you are, there will be a timetable when you put money away. But at 5% interest, that would mean that you're being very safe with it, very low risk. We would tell you that you also need to then invest it to make these years come sooner. So if you want to retire early, you save more and invest a little bit more moderate, a little more aggressive to make that money grow over time. At 5%, you got to save about 64% of your pay to get there. If you at 5% interest, the higher you raise your return, the amount you need to save lowers. So there is mathematically a way to figure out how to retire. It is about what you bring home and what you need and where you're going to live and how much money it takes for you to live and building this out.
Yeah. Yeah, especially that's the key one there, Brian, how much it takes for you to live off of.
Yeah, I mean, it's enjoyable to bring money home and to use it and have fun, but there comes a day where you got to have a balance, from today till tomorrow and have money when you can't work. The money has to be there too.
Right. I have clients living just off of Social Security right now, or maybe just off of a pension, and that's okay because that's how much they're spending. But for somebody who's spending more than what they're bringing in from Social Security or pension, now we need to supplement that income somewhere. So that's so important, is to have enough saved to offset what you're spending.
Yeah, we talked about the idea of winning in retirement. What is it? That was the very first thing I asked Paul to start the show today, winning in retirement. What is that? Now, it is up to you what you want it to be, but you don't want your retirement savings to dictate your level of winning. So like if you don't save the money, you don't prepare, that level of winning will be more of a survival than a financial independence or a choice of things in retirement years. Right, Paul?
That's right. Yeah, absolutely. The idea where, and that doesn't even account for, unforeseen expenses throughout retirement. Those would always be lurking in the back of the mind if you don't have enough saved for that situation.
So people that might make less money are surprised by the reality that they can retire a lot easier than people that make a tremendous amount of money, because it's all about what they keep. Mm-hmm. Imagine that just simply if you make $100,000 versus making a couple of $100,000, your taxes double because you make $200,000. It's not just simply go double in number; it doubles in percentage. So if someone at $100,000 married filing jointly pays 12%, that's $12,000. Mm-hmm. If someone's at $200,000, all of a sudden they're at a 22%, 24% bracket. All of a sudden, that's 22 times 2 is 44,000. So it didn't just go from 12 to 24, it went from 12,000 to 44. So when people make more money, there's more pieces, more leaks in the bucket that we've been talking about. Right. You got to plan these things out so you're paying less tax now and in the future. We love paying tax now generally, but not in every case.
That's right.
Coaching and planning is bringing the right answer to you and making sure you're being wise.
Right, and get you to the place where you can just become financially independent. That's so important. If some people, they really enjoy their job, they can decide they want to work afterwards, but at least they'd have the choice to retire if they wanted to. That's a really wonderful idea to have and really awesome thing to happen in practice.
Yeah, financial independence is that day you walk out into the field, you go to visit your cash cow herd. Now, that might be an example of a visit with your financial planner, of course.
Right.
And you visit your cash cow herd, and they explain that, hey, the cash cows are ready. They're mature. We can start milking the cows. It'll start sending you this level of income. And guess what? That's the amount level of income you told us that you needed. When would you like to retire? And then you think about it, I'll retire today. But you got to give some notice and stuff. But, it's that wonderful financial independence talk where you're saying to someone, yes, you can retire. I remember a nurse came in. She was frustrated from work, frustrated from just not feeling right. She came into the meeting. We sat down. She goes, Brian, can I retire? And I looked at all the numbers and I said, yes, you can. She goes, what? She wasn't ready for the yes answer. And then when that yes answer changed her face, went from like frowning to smiling to excitement. And she really, really was happy to know that she's going to be okay and she could go ahead and retire. And she did. And she's been retired for a while. That was a very good day, a fun day.
Yeah, that's the goal, is to be able to make that decision, especially in having somebody working alongside you to be able to find that. Yeah. It's hard to do it on your own. You have to plan out all the different circumstances that can happen. So,
absolutely. Yeah. That cash cow herd. Now, what I like your cows' names to be, one of them is a Roth IRA or a Roth 401k. Roth means you paid a tax already, and that milk, when you milk that cow, you get to keep all the milk. I like that idea.
Absolutely. Yeah.
So, but that big tax-free Roth retirement cow is not going to grow itself. You need to grow it yourself.
That's correct. Yeah, and you have to remember you're limited on how much you can add to that each year as well. So the earlier you start, the better.
Yeah. Now, there's a comment called "Let's get the hay in the barn." Hay in the barn means something's like all Everything's in the barn. We're good to go. That hay in the barn helps feed these cows, keeps them going. Let's take advantage of the idea of this. You know you need to prepare to win in retirement. How does it start? It starts with that initial free meeting with one of the financial planners we have, one of our team of advisors, right, Paul?
That's right. Absolutely.
Now, that's painful or painless.
I would say it depends on the situation, okay. But sometimes it is painful, and it's a lot of times it's because somebody's coming for help, and that's perfectly fine, and that's something that we are able to do with them.
Oh, we want to take the pain away. So the idea is this: you've been worried about it. Give us the worry. Let us think about it. Let's come back with the answers and say, oh, yes, you're okay. Let's do this and that. It's easier because we've helped hundreds of people retire. We've been a guide, a coach, and helped people build these herds like we're talking about over the many years. That's what coaching helps. Financial advice helps you understand where you are, what your financial fingerprint is, and then what you need to do now to get ready to retire. And that's all about preparing to win in retirement. Once again, go to our website, akersfinancialgroup.com. Check out Winning in Retirement Training Day, and we look forward to seeing you on October the 13th. Thank you for a good show today, Paul. Appreciate it.
Yep. Looking forward to seeing everybody October 13th.
Absolutely. Now, we want you to win in your retirement years by being prepared to win. So take advantage of the opportunity to begin planning with us at Akers Financial Group. To schedule your free meeting with one of our team of advisors, go to our website at akersfinancialgroup.com. Scroll to the schedule a meeting section and let us know you'd like to schedule that free meeting. That's akersfinancialgroup.com, or you can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person meeting with one of our team of advisors. Start planning for your retirement now. Go to our website, akersfinancialgroup.com, or call us at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Akers Financial Group offers securities through Archedios Capital, an SIPC and FINRA member firm. Advisory services are provided through Archedios Wealth. Akers Financial Group and Archedios do not share any common ownership. Neither Archedios nor Akers Financial Group provides tax or legal advice. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and/or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.